It says that the foreign firms in which Chinese firms have less than 10% share, they can invest automatically in India. Don't you think it's too restrictive? Which Chinese firm will be interested in investing with, suppose I'm a Singapore-based firm or a Finland-based firm where Chinese firm has 10% stake. Who will take the decision? That Singapore government or Singapore firm will take the decision, not the Chinese. So Chinese are not in the driver's seat. I don't understand the logic of this, but right now I feel it will be totally ineffective.
Hello and welcome to Macro Decode. India's relationship with China in trade and investment has been contradicting. While India's imports and trade deficit with the country touched record high of FY26, India has been restricting investments from the country. Recently, India has relaxed some of the norms, but with lot of hesitation. Let's talk to Ajay Srivastava, founder of GTRI, to find out how our policy on Chinese trade and investment should be reshaped to benefit us. Welcome to the show, sir.
Thanks, Sangeeta.
Chinese imports and trade deficit was at an all-time high levels in FY26. $131 billion of Chinese imports and $112 billion of trade deficit. Why should we be worried about having a large trade deficit with a manufacturing giant next door?
Let's talk about the data in the past 5 years. What has changed? So our imports have more than doubled in past 5 years, but exports are even less than what they were 5 years back. As a result, deficit has increased by 2.5 times, from about $45 billion to, as you rightly said, about $112 billion. So let's see how much of imports from China they account for our total imports. So if we divide our imports from China of $131 billion to India's total imports, the dependence on China comes about 16%.
Right.
But this does not give us full picture. For understanding, let's divide all our products into three categories. One is agriculture and processed food, and then fuel, and then gems and jewelry, diamond and gold, etc. We cluster all these things into one category and all the remaining products into another category. So first category, China does not supply to us. Their exports to India are just less than 1.5% in this agriculture, fuel, gold and silver.
Right.
What is worrying is that the remaining of China's imports, about 98.5%, they are into the remaining products and they are all industrial products.
Right.
So the share of China in India's industrial products is more than 30%. It is increasing gradually. So that's our major worry. And most of these are industrial products that go into the factory as inputs. So suppose we have some bad days with China and they stop something, then it will be a big issue for India's industrial capacities.
Right. So, as you rightly pointed out, our dependence on China for manufacturing intermediaries and raw materials are very high. And you also said, that makes us vulnerable when days go bad. What are the other kind of vulnerabilities that we have when we are so much dependent, especially our manufacturing industry is so much dependent on China?
So, we just discussed that more than 30% of India's import of the industrial products, they come from China. But within these is about 66% of imports from China. They are focused only on four categories. They are electronics, computers, machinery and organic chemicals. So Chinese exports to India are focused on these categories, and within this category, our import dependence may be extremely high. For example, the dependence on machinery and computers is about 41%. That means our imports, 41% of our total global imports, they come from China for machinery and computers. 43% of our electronic imports, they come from China. 44% of our organic chemical, that includes our APIs also for pharma raw material, they come from China. So more than 40% of our dependence on China for these major categories. But even let's go at deeper level. We import 70% of the chemical APIs and about 90% of the biological APIs, antibiotics,
Okay.
etc., from China. If we look at, say, erythromycin, we import almost everything. 98% comes from China. What happens if China stops this? It's used in almost every third medication in India. Then silicon wafers, 96%. Then solar cells, 82% from China we get. We get flat TV channels, more than 80% from China. Embroidery machine for textile machinery, more than 90%. So for certain groups, our dependence on China is extremely high, and China can play around if time becomes tough, and we are not ready for that.
Right. When it comes to critical components, China has that control over us. If not China, what are the alternatives that we have? How far have our PLI schemes help us in making us self-sufficient in manufacturing?
Let's go back before 1990s. India was much ahead than China in making of APIs. We were making more APIs. We were exporting more electronic hardware. We were exporting many things more than China. But since 1990s, we stopped talking about manufacturing in a serious way. So coming back to PLI, Apple is a major success story of PLI. So Apple and Samsung, they corner substantial allocations of the PLI. Rest, I don't know what are the success stories. All we know is that PLI did great for smartphone manufacturing. Right now, of course, we buy most of the components from China and other countries, but gradually we hope that our indigenization of the components, it increases. So
if not China, is there any alternative market where probably we can substitute our imports so that we don't keep all our eggs in one basket?
So right now, not only India, major countries, they are like US, like Europe, Japan, South Korea, they are mostly dependent on China for their industrial goods supply. But one thing that differentiates us from countries like, say, Japan and South Korea is that while they import a lot from China, they value add and export back to China. Their exports to China are equally good. So imports and exports are almost equal, maybe more also in the case of Japan or South Korea. So higher imports is a worry, but if we can export better, export more to China back, then it's okay. We are not doing that. So high imports are a concern, but we're not exporting back to China is a bigger concern. Some of these Southeast Asian brands, Korean brands, they use Chinese components to cut costs. We have to look at all these things de novo and see how we cut it. There are no ready answers. We have to look at product to product where we can cut that.
Okay. But also, there is also a threat that, China has been investing in these countries, especially Southeast Asian countries. Most of them are kind of, backyard of China. So does it actually mean that, they are a substitute for China?
So we have to understand that China became the manufacturing and export power of the world. And then US and Europe and everybody started noticing, putting restrictions on imports from China. So China changed its strategy a bit. So they say, let's produce the major part of the product constituting 80 to 90% of the value add, and let's finish it in our friendly neighborhood countries like ASEAN countries. So Chinese they set up JVs in these countries, Malaysia, Thailand, Indonesia. Chinese exports to US, you may see it's coming down, but Chinese exports via these countries to the US is going up. So ultimately, China is the winner. That's what is their strategy. They will not invest in another country where they'll be making everything de novo from the raw material.
So should we actually join this group or should we actually keep away from it? What should be our strategy?
So I am very clear on this. If we can broadly divide goods into two parts. One is goods where we don't have technology, very high-tech electronic components or machinery, and they account for less than 10% of the total trade or manufacturing. Rest 90% we should try making those things in India. When India has the capability to reverse engineer the pharmaceutical molecules and develop generics and export all over the world, these mechanical things, TV, refrigerator, today we import even nuts and bolts and screws and fasteners from China. We should reverse engineer these in our IITs, NITs, BITS, and CSIR labs. We should do that on the national scale. We are talking more about policies, schemes. We are not doing enough on ground.
How much protectionism will help us? Like we are seeing that actually ill effects of protectionism in US and other countries. So should we actually go this way, or should we keep away from protectionism?
So every country, I mean, US, Japan, South Korea, Europe, they were all protectionist for certain sectors where they thought they should make it on them. Wherever they were not protectionist, everything has been shifted to China, or we say they shifted deliberately to China. So protectionism in the long run does not pay. But ultimately, we have to identify, say, 20 sectors where we want to produce domestic manufacturing. We have to create conditions to check unreasonable, low priced, dumped imports from that. We have to provide protection for that. But we should not do protection to fatten the revenues of firms by protecting them from imports.
We should understand the dynamics of each and every product and category, and then have a fine balance of this, whether you need to go protectionist or we should have imports more. We can't have a kind of blanket policy for every category and every product, if I'm right.
So if you look at say automobile industry in Japan and South Korea, they look like open, very single digit import tariffs. But on the roads in Japan, more than 90% of the cars are Japanese. If tariffs are so low, then cars from world over should be there. Apply regulations, apply protection only on the conditions with the vision that the protection we are providing is to enable industry to become globally competitive in few years. Make world-class product. That's what Japan has ensured, South Korea has ensured. In our case, in many sectors, we are providing protection, and that's going into the revenue of some large firms. That doesn't help the country.
Now, coming to investments, why are we saying yes to imports from China, but no to investments from China?
So imports and investment from China were always open, but after that Galwan skirmishes in 2020, we temporarily put some checkers on investment from China. But in the period before Galwan, before 2020, when there were no restrictions on investment from China, nothing substantive came from China. So if people who feel that by removing these investment conditions, there will be floodgates open, will be receiving a lot of investment from China, that's not going to happen. If at all some investment from China happen, they will be happening for selling of Chinese goods in India. So they may invest into marketing, they may invest into final assembly of a product like we discussed, but they are not going to invest into core manufacturing. We should not say no or yes. As I say, every product, every investment is a story. So we need to know retail for what product it's coming. If it's coming for telecom product, installing a chip that transfer information back to China, of course we have to say no. But if it's coming for making of some electronic components, of course, it's the most welcome. We have to take decision based on the details. We cannot take a one-line decision in a helicopter view. We cannot take.
As you have rightly said, that we can't have a kind of a blanket kind of policy for even for investments. It has to be from product to product, looking at what benefits us and not doesn't benefit us. But as the government perceives it, like there is a threat for our industry. Can we have enough safeguards to prevent any kind of a takeover by Chinese companies while still attracting investments and technology?
I think in the next 10 years or 20 years, India should only be focusing on making more things. We are not making things. Wherever we were strong, we are losing strength. For example, textiles or handicrafts or leather, shoes. We are losing to competition from low-cost countries like Vietnam or Bangladesh or Ethiopia, so many other countries. What is progressing in India is based on imports. You import everything, final, do some assembly and export, electronics or those sectors. Even pharma sectors, it's a pride of India, but we import APIs in a big way. For I think next 10, 20 years should focus on reverse engineering, reverse making of the products like we did for pharmaceuticals.
So how do you see this recent relaxation of FDI norms to attract Chinese investment? It's not a fully opening up.
I don't understand this opening at all. It says that the foreign firms in which Chinese firms have less than 10% share, they can invest automatically in India. Don't you think it's too restrictive? Which Chinese firm will be interested in investing? And with, suppose I'm a Singapore based firm or a Finland based firm where Chinese firm has 10% stake. Who will take the decision? That Singapore government or Singapore firm will take the decision, not the Chinese. So Chinese are not in the driver's seat. So I don't understand the logic of this. Right now, I feel it will be totally ineffective.
Lastly, broadly, what should be our policy towards Chinese trade as well as investment? Now, should we be looking at kind of being part of this global value chain, or we should get more investments and look at having more manufacturing of our own?
So two broad approaches can be followed. First is do reverse engineering for more than 90% of the products. We can do that. Why we need to import nuts and bolts and fasteners and small machines and all those things? We should make. We can make. We should make. Number two, wherever we don't have technology or wherever we need a lot of investment, there we should invite global anchor investors, come manufacturers like Apple. Maruti Suzuki came in 1983. It transformed, and Maruti Suzuki JV transformed our automobile sector. Because of this one JV, the productivity of entire automobile sector, not only this JV but entire automobile sector of India, it went up by 250% in the next 15 years. So we got Apple. We hope Apple does something good to India like it did to China in the next 10 years. Similarly, we need at least 10 to 20 such high scale firms who bring investments also and who do manufacturing in India. So for low technology, medium technology, let's do it ourselves. For the remaining where we don't have, let's invite the reputed manufacturers and give them what they want.
Right. So that should be our policy, having manufacturing where we can. And if we are not having the competence and the technology to manufacture, let's invite others who have that competence and ask them to make in India. So thank you for joining me on this show.
Thanks for inviting me, Sangeeta.